Okay, let's take a moment, look at the disclaimer. This content is for educational, informational, entertainment purposes only, and nothing should be taken as a recommendation to buy, sell, or hold any securities at any time. We are here just to spread the word of how BTA analyze the markets, how we look at the market, and nothing should be taken as a recommendation. This is Rod from BTA, and we are known as the middle traders. What I want to do very quickly, okay, is give a quick update to our Bollinger Band strategy, okay? Now, we know, I hope everyone had a chance to look at the video I posted early this morning. It should have went live around 7 o'clock this morning. Today's date is 6/3/2022, okay? And that video should have went live around 7 o'clock this morning, okay? And it was all about the Weekly Bollinger Band Strategy and how we hit the pivot week and we're looking to start buying, okay? It's basically, it's a go time. But, okay, it's a few things we have to make clear. I just want to go over a few things real quick. All right, the ETF that we said we liked the most was the ITOT, okay? In that video, we said the ITOT looked the best. So this is a weekly chart of the ITOT. And the reason we said it looked the best is because where it's positioned on the chart, okay? Where it's positioned on the chart, this is the closing prices. Here is the 100-week moving average. This is a weekly chart of the ITOT, the Standard & Poor's total market, total U.S. market ETF, okay? So it tracks the total market. Here's the 100-week moving average. The thing about the ITOT is it closed right just barely above the 100-week moving average, just barely above the 100-week moving average. The 100-week moving average is at 92.70. The ITOT closed last night, yesterday's trading, it closed at the end of the day at 92.83. So 13 cents above the 100-week moving average, okay? So what we want to do is use that 100-week moving average as our area of interest. Okay, so first of all, the ETF has to open up above this 100-week moving average. It has to open up above the 100-week moving average. If it doesn't do that, if it opens up below the 100-week moving average, we're going to wait. We're going to wait until it trades back above the 100-week moving average. It has to do that. Okay, it has to stay above this 100-week moving average. And it has to stay above this downward trending 8-week moving average, the green line, okay? So the things that we're looking for, just to make it very clear, this is last week's close, last week's trading action, last week. Last week, the ITOT closed, okay, it closed at 92.33. That's our pivot, 92.33. That's where it closed at. But being that we're so close to the 100-week moving average, it has to stay above the 100-week moving average, which is 92.70. So 92.70 is our new pivot for the ITOT. It has to open above that and trade above that. If it opens up below 92.70, if it opens up below 92.70, then we're going to wait until it trades back up and breaks above this 100-week moving average. If it trades back up and break above the 100-week moving average, then that's going to be our pivot, okay? That's when we'll go in on the ITOT. And it has to stay above. It has to stay above this downward trending 8-week moving average. If it doesn't stay above the downward trending 8-week moving average, then that's going to also be a problem. So we got two things. I'm going to expand this so we make sure we can see it very well. It's two things that we're looking for this morning when the market opened in order for us to take action. The ITOT has to open up above its 100-week moving average, which is at 92.70. If it doesn't, if it opens up below it, we're going to wait until it trades back above it and breaks above it, okay? It has to break above the 100-week moving average. And here's our downward trending 8-week moving average. We have to stay above that. If we can't stay above that downward trending 8-week moving average, there's no action, okay? So that's where we at with the ITOT. That has to happen in order for us to actually pull the trigger. And then we're going to use this 100-week moving average and the 8-week moving average. Okay, we're going to use the 100-week, this magenta, purplish looking line. We're going to use the 100-week moving average, and we're going to use this downward trending green line moving average, which is our 8-week moving average, as our areas of interest and our stops, okay? If we start breaking back below the 100-week moving average and breaking back below the 8-week moving average, that's going to be a problem. If we see that we're going to get below that and we're going to close below that on a closing basis, then that's going to be the area where we're going to take half off, okay? And then if it ever break back below, okay, it's low, basically, the low of the week, because this is the last trading day of the week. If it trades back below this low, if it ever breaks back below this week's low, okay, this week's low, then that's going to be our cue to get out altogether. So that this week's low is right around 90.28. 90.28. That's going to be our cue to get out altogether if it ever breaks back below today's low, okay, of 90.28. So that's where we're at with the ITOT. We're not going in until it get above the 100-week moving average. If it breaks back below the 100-week moving average or the 8-week moving average, then that's going to be our cue to take half of this stuff off the table. And if it ever close back below this week's low, which is around 90.23, I'm sorry, this week's low is 90.28. 90.28 is this week's low. Okay, because this is the last trading day of the week. Starting Monday, this would be our second stop anyway. Okay, so we might as well use it now. Because if it trade down that hard by the end of the day, well, that's not a good sign. Okay, so that's how we're looking at the ITOT. It is looking the best because the way it's positioned right now, we got some very key areas of long-term areas of resistance that we're breaking above it. So we can now turn around and use that as support. Okay, and they're very tight and very close to each other. If we go and look at the chart of Lois real fast, okay, if we go and look at Lois's chart real fast, all right, Lois around 90.62 is where Lois is sitting at right now, okay? Around 90.62 is where Lois is sitting at right now. So if I expand this just a little bit more where you can see it, okay, let me just bring this up and over just a little bit so you can see it. All right, Lois right now, okay, here's the blue line of Lois. She's sitting right down on this horizontal right here, this horizontal support level, right, which is at 90.58, but Lois is actually at 90.62. That's where her blue line is at right now, okay? So 90.62 is an area where if Lois is saying that's where she's sitting at, if you close below that, then Lois is going to say that this upswing may be broken, okay? So that's how we're going to look at the ITOT. That's just the way we have to play it, okay? Because we don't want to get hurt. We want to be very careful, okay? It's all about not losing money. And if you lose money, it's all about not losing a lot, okay? That's just the bottom line. And one of the interesting things about the ITOT, we back on the weekly chart now. We back on the weekly chart where we had that 100-week moving average and that downward trending green line is the 8-week moving average. I keep saying it now. That's our levels. We got to trade above that 100-week moving average in order to go in. And we got to stay above it, and we got to stay above the 8-week moving average. We see we about to close below that on a closing basis. We taking half off. If we ever break back below the low of this week, which is, again, 90.28, we're out. 90.28 is even lower than what Lois had, right? That's even lower than what Lois had. So let's go back and look at what Lois had one more time. That's even lower than what Lois had. 90.28 is the low of the week, and that's pretty much where that 4-week moving average is sitting, the white line, 90.28. Lois is at 90.62. So that's even lower than Lois. All right. So that's it. That's where we're gone. Okay. All right. If you're getting below Lois, it's a problem for us. So that's how we're going to look at this ITOT, that 100-week moving average. Let's see how the market opens up. All right. Now, let's look at the Standard & Poor's 500 ETF, the SPY. Okay, we already know what we're doing with Lois. That 100-week moving average, 92.70. Got to stay above that. Got to open above that. If it trades below it, we're gonna wait till it trades back above it before we get into that position. Okay. Now the SPY. This is the SPY's weekly chart, the SPY, the ETF that tracks the Standard & Poor's 500. Basically, with this one, very quick. Here's last week's trading action, and this is last week's high right here. Okay, the SPY closed last week at 415.26. 415.26 is where it closed last week. Okay, that's our pivot. If the market opens up below that today, we're not taking a position no matter what until it trades back above that 415.26. Okay, that's our pivot. Here's the 8-week moving average. Downward trending 8-week moving average. We got to stay above that. Right now, it's at 413. So for the SPY, the market has to open up above these levels. We're going to take a position. Okay, it has to open up above these levels in order for us to take a position. That's our pivot, 415.26. If it opens up below that, we're not going in. We're going to wait until it trades back up and breaks above that. And it has to get above that 8-week moving average. If it opens up below the 8-week moving average, we're waiting, okay? It has to get back above all of that in order for us to take a position. I'm going to expand this to make sure we can see it, okay? Here it is. That 8-week moving average, that green line, you see it right here. The green moving average, it has to trade above that. That's around 413.90. If it opens up below that and it doesn't trade back above that, then we won't get in. Okay? It has to stay above that, and it has to stay above last week's high. That's the pivot. If it opens up below last week's high, which is with the close rather, last week's close, which is 415.26, that's our pivot, then we're not going to take action. So we have to see how this market opens. Now, the nice thing about the SPY is that we got the 100-week moving average right below it. We got the 100-week moving average right below it, and we got that 4-week, the white line, which is 4-week moving average right below it. Okay, that's our second stop. That's our stop out no matter what. Okay, so we're gone at that point. All right, that's the out. So we got some very close areas here that should hold, and they're long-term key moving averages, so they should hold. We start breaking below that, that's a problem. So the 100-week moving average is at 407, okay, and the 4-week moving average is 406, okay. The low of this week is basically 406.93. So 406 will be it. We break below the 4-week moving average. That's our stop is over. Okay, we're out. That's our maximum stop loss. So the pivot is 415. Okay, the pivot is 415. We out at 406. All right. So that's the out. It's all over. Second stop, we're gone. That's our maximum stop loss. So when the market opens up this morning, to sum it up for the SPY on the weekly chart, when the market opens up this morning, if it opens up below last week's high, which is the pivot for the SPY at 415.26, we're going to wait until it gets back above that. If it gets back above that, then we're going to take our position. And we're going to take a smaller position in the SPY. We're going to take a smaller position in the SPY, smaller than what we take in the ITOT, because the SPY has a very big ATR, okay? The volatility in the SPY is a little higher. I think it's like $6 to $7. It moves about $6, $7, $8 a day, okay? So the volatility on the SPY is a little higher. The ITOT only moves $2 to $3 a day, okay? So because of that, and the market is very volatile, it's swinging kind of hard, we're going to take even a smaller position in the SPY until it proves itself. And we don't have much further to go, because right up here at 425 is our 13-week moving average. That's going to be some heavy overhead resistance, okay? So we don't have much to go. So we don't want to get hurt. We want this thing to build up. We want to build our position slowly, and we want to make sure that we know we're coming into some serious overhead resistance, okay, with that 13-week moving average. All right, so we don't want We don't want to get too courageous because we know this thing can hit the 13-week and get rejected, okay? And right above the 13-week is the 30-week, all right, moving average. So we got some longer-term key moving averages up here. So we don't want to get too courageous. We're going to move in slower with the SPY. It's very volatile. $6, $7, $8 a day it can move, all right? So we're going to take a smaller position on the SPY than on the ITOT because the ITOT normally only moves $2 to $3 a day. So that's it with the SPY. Has to open up above last week's close, 415.26. If it doesn't, we're gonna wait. We're gonna wait until the trade back above that. It has to stay above the 8-week moving average. Okay, that green line. It has to stay above the 8-week moving average, which is around 413. Okay, if it trades below that, we're gonna have to wait. All right. If it opens up below that, rather, we're gonna have to wait until it clears that and clears the high. The high of the close of last week, which is pretty much the high because it closed right on the high. 415.26, that's the pivot. We're using the 100-week moving average and the 4-week moving average. This 100-week moving average line and the 4-week moving average line as our second stop. We're out. That's at 406, okay? If it closes back after we end the position, if it closes back below, well, go to the, I already sent out my trading plan. You can follow me. Paper trade behind me or whatever, because this is not a recommendation. None of this stuff is a recommendation to buy, sell, or hold anything, but it's great for paper trading. Wouldn't it be great if it was a recommendation? But it's not, right? So the 8-week moving average and the close, the pivot, if it breaks back below that and looks like it's going to close below that, we're going to take half off. If it ever breaks back below the second pivot, which is now going to be the 4-week moving average, which is pretty much the low of this week, okay? Because the low of this week is 406.93. The 4-week moving average is 406 on the dot right now. So if it ever closed below that, we're out on the secondary stop. So it's in position here to have some tight stops, which is key. They're longer term, okay? We're looking at closing basis, right? We want to see how I do on a closing basis. They're longer term, right? And they should hold as support, okay? And we should see if this rally is going to have any legs, this 100-week moving average should hold that support, and this thing should run up at least to the 13-week and maybe the 30-week moving average before we have some areas of interest that we need to take a look at. Now, for this SPY, also, if we go down to the daily chart, okay, let's look at lowest. Lowest is right around 408, okay? Right now, lowest is at 408. Is where lowest is at. We see our blue line of lowest. Let me expand this a little bit and bring it over, right? We see our blue line of lowest right here. It's below prices, right? Our blue line of lowest is below prices. It's at 408. Our stop, second stop, out no matter what, done, over. It's 406. So it's below lowest. The 21-day moving average is right below that, right around 407, 406, okay? So that's great. That's great. We got these horizontal support levels right here, which is prior resistance, the horizontal lines with the support level, that's at 408. So we got a lot going on right here. So if we break back below 406, that's our second stop. That's out. Then it's over, okay? So that's when we're going to be gone because you're breaking down below key long-term moving averages, you're breaking below lowest, there's no need to hang around, okay? Now, like I was saying before, overhead, we got some strong overhead resistance that we're coming up upon, so there's no reason to get too courageous with the SPY, right? We're going to take a smaller position in the SPY than we do in the ITOT because of the volatility and where it's at. But if I expand this, you can see we got the 50-day moving average right above head. It's at 424, okay? So we know when it gets to this downward trend, if it works, if it doesn't fail early and it does rally and move higher, then we know this downward trend of 50-day moving average is going to be an area of interest. We can run up to that, get rejected, bump our head, get rejected, and it fails. It's at 424, okay? So I just wanted to show that to y'all, just so we could be clear that we have overhead key, longer-term overhead resistance that can cause a problem. So 424, the 50-day moving average, 425, the 13-week moving average, the yellow line. The 13-week moving average is the yellow line, okay, right here. 425. So that's where we're looking to see. That's going to be our next area of interest where it could be a problem. After that, we got the 30-week moving average on the weekly chart right here at 431. Okay, so if we rally up, that's where we're going to be looking for the market to have a little area of interest. It may stall, consolidate for a little while, or the best moves blast right through, but it might not happen, right? We have to see what happens. Now, for the final ETF that we said that looked halfway decent was the DIA. The DIA. Now, this is a weekly chart of the DIA. And very simply, okay, we are not going to go into the DIA until it trades above 335.53, which is the 13-week moving average. Okay, all right, that's about $3 from where it's at right now. Okay, and the reason why we're doing that, okay, instead of using last week's high, last week's close, which the market pretty much closed on the high. I keep saying the high because it closed pretty much on the high. The close from last week is 332. Okay, the 13-week moving average is 335. That's only $2. Okay, and the DIA can move $6-7 a day. All right, so it's very close. Okay, and it can move $6-7 a day. So we might as well wait until we're not trying to get the very first dollar. We're trying to get the safe money in the middle. That's why we call ourselves middle traders. So 335, the 21-day moving average is 335, is where we're gonna wait. Okay, the 13-week moving average, the 13-week moving average on the weekly chart. It's yellow like our daily chart moving average, so that's why I got mixed up just now. But it's the 13-week moving average on the weekly chart is at 335.53. It's only $2 and some change away from where the pivot is. The DIA can move $6-7 in a day. So we rather wait and see if we can get above that level. We can lose the first $2 or $3, but it's safer. Then we can use the 13-week moving average, the 8-week moving average, the green line, as our areas of support. 13-week, the green line is the 8-week. So we really like the position of the ITOT first, SPY second, and DIA will be the third. Okay, the Qs and the IWM. Now we got to wait on those because if you go back and look at the video that we put up around 7 o'clock this morning, those are having very low volume. It's moving with low volume. Don't like it. Okay. Now, also with the DIA, if you notice, our final secondary stop out, no questions asked. Okay, no questions asked is the low of the this week, which is 325.36. Okay, 325.36. So now that spread from the pivot 335 to the out is 325. That's almost $10. Okay, the 100-week moving average. The 100-week moving average is at 325.96. Okay, the low is 325.36. So the low of the day, the 100-week moving average and the 4-week moving average are all right there together. Okay, it's all right there together. The low of the, not the day, the week. I'm sorry, the low of this week. Okay, the low of this week, the 100-week moving average, right here, the purple magenta looking line, 100-week moving average, and the 4-week moving average is all right here at the low. It's all right here at the low of this week. Okay, so basically right around the 324, 325 level, it's a wrap. That's our secondary stop. We're out. No questions asked. But if we ever break back below the pivot, get back below this 8-week moving average, we got to take half off. Okay, sell half and then see what happens. Okay, we don't want to get hurt. So if you notice, the DIA has about a $10 area there that we can lose up to $10, right? The ITOT and the SPY was a lot tighter. Okay, so we don't like to lose money, and if we lose money, we want to lose a little bit, not a lot, right? That's how we look at it. All right, so now there's one thing that we have to be careful that what we're going to do here at BTA, so y'all can follow behind us, paper trade with us. It's a good learning experience, right? So now one of the things that we do is that we look at what that maximum loss could be. So just say for the DIA is $10. So we make sure that we only buy enough shares where if we do lose this $10, okay, if we do lose $10, that we only lose 1.6% or a maximum of 2% of our overall account balance, okay, of our overall account balance. So that's what we're looking at. So you got to size your position properly, right? That's what we do. We make sure we size our position properly. We don't want to get into a situation where we lose too much of our account balance on any one trade, right? So we got to make sure we size our position very properly, all right? So we don't want to lose too much of our account balance on any one trade. So we got to size our position. We're only going to buy a certain amount of shares. So if you're, just say for instance, if your account balance is X and 1.6 of that 1.6% of that total account balance or maximum 2% is $300, then guess what? Only buy enough shares that if the stock go down, you only lose $300. All right. So that way you only lost, you still within your money management rules. All right. You want to have proper money management. You don't want to take too large a position where that's how you blow up your trading account. Okay. It's just plain and simple. That's how you blow up your trading account. 2% is the max for us on any one trade. Because think about it. If you got 5 other stocks and you lose on 2% on 3 of them, now you're down over 6% on your account. Now you got your other 2 that you want to try to make up that difference. But what if it's an extremely bad day and you lose on all 5? You're down 10% in one day. You can't afford to lose 10% in one day too many times. That'll blow you up. So if you oversize your position, okay, and you oversize your position, that's how you blow up your account. So make sure you use proper money management at all times in the future. Whenever you do trade, make sure you use proper money management because that can save you. So the DIA, okay, the DIA has a pretty large, a $10 possible loss if things go drastically wrong. So we're going to make sure we size the position where we don't get too hurt, right? So it'll probably be a small position like the SPY, okay? Because we're going to go even smaller with the SPY. We can probably have a very small position in the DIA. So the largest position really would probably be the ITOT if this all plays out. But at the end of the day, okay, to sum this all up, let's just look at lowest real quick on the no, this is the weekly chart of lowest. Let's go back to the weekly chart here. I want to go down to the daily chart of lowest. I want to go down to the daily chart of lowest here. Okay, now the DIA, we talked about that 50-day moving average right above top, 335. Okay, it's only $3, $3 above where we're at. So we're gonna wait until they get above that 13-week moving average, which is pretty much in line with the 50-week moving average, with 50-day moving average. Sorry, the 50-day moving average, which is right around 335.37, 335.37. Right. So that little $2 or $3, as far as we're concerned, we rather wait for it because you see it can run right up to the 50-day, bump its head and get rejected. Same thing on the 13-week moving average. We rather wait. Okay. You can see down here that the ATR, the DIA moves $6 to $7 a day. Okay, so you got to be careful. But let's look at the chart of lowest real fast. Okay, on the DIA. Here's the chart of lowest. All right, lowest is right around 326. Okay, right now on the DIA, lowest is right around 326. Okay, so that's right around that 325 we're talking about. Okay. So it's all right there together. All right. You can see the blue line of lowest. Lowest signaled what? 1, 2, 3, 4, 5, 6, 7 days ago. Okay. Lowest gave us the blue line. I'm telling you, we can't lose with the stuff lowest use. Okay. So look, 326 is where lowest is at right now. All right. We got these support levels, the horizontal support levels at 327 and 326 also. So that 325 is it. That's our maximum stop. That's about $10 away from the pivot. So we're going to size our position properly that If we do, we got to get the stock room to move because you got to go by the trading plan on the Bollinger Band strategy. So we got to give it room to move. So if that's the case, we're going to size the position a little better where we don't take that hit on that $10. Okay, it don't be too large. So it all depends. To sum everything up, ITOT is looking the best. SPY second, DIA third. We see what's happening with the market. It has to open up above our pivot. It has to open up above the 8-week moving average. If it doesn't, we got to wait until it does. On the ITOT, got to get above the 100-week moving average. If it doesn't, we got to wait until it does. Okay, if it ever break back below last week's close, okay, that's where we're going to be our first stop. Okay, then if it ever get back below the low of this week, that's our second stop, and it's over. Okay, so that's how we're planning. So we just want to do a quick update on how we plan on playing this thing today. I hope everybody get a chance to look at it. Listen, this is a good learning experience right now because the market is very volatile. It's in a bear market. It's hard to trade. It's very topsy-turvy. If you can survive in this, when we get in the bull market, when we get into that bull market, let me tell you something. It's going to be like taking candy from a baby because this is hard trading right here. Okay, you got to be skillful and you got to know what you're doing right now. All right, but when we get back into that bull market, it'll be like taking candy from a baby. All right, so until next time, y'all, like I said, I'll be traveling, okay, next week. I'm going out of town this week, and then I'll be out of town all next week, but I'm going to try to put up some videos from the hotel room, but I'll be traveling, so bear with me. I'll be doing this thing from a laptop, and I'll be doing this thing from a hotel room next week, and hopefully I can pull it off. All right, so y'all take care, everybody. Be safe. Talk to you later. All right, good luck, everybody. If you are trading today, it's very volatile out there. Be careful. Large swings. Look at the blog. We post up the daily swing signal, okay, on the blog. So look at that. There's some economic data coming out. All right, everybody stay safe. Talk to y'all later.